Market at its highest level since about May 3rd.
It was a good day for the market, and we broke a key technical level as well. So 4,400 points above that again for the third time. And if we just have a two-year look at the two-year chart for the Australian share market, this is what it looks like. I've just drawn a line at that 4,400 point level. You can see that we reached it in November last year. We once again tested that mark in May and failed. We're once again above that mark. So hopefully third time lucky for the Aussie share market. If we manage to hold above these levels, it does bode well. In terms of the Aussie share market, today though it was all about the Bank of Japan and splashing cash around. And I guess it is a race to debase our currency. We know that the Bank of Japan has been trying to tackle that very high yen, which impacts on exporters, but also deflation and slowing global growth as well. The commodity-based stocks were the big winners out of this one. We did see iron ore prices up by 4.3% overnight. So Fortescue, another impressive performance today, up by 5.4%. But Arium was really the best performing stock in that iron ore space, up by a massive 8.1%. We also saw the gold miners doing well. St Barbara Mines was up by 6.8%, and Regis Resources up by 2.7%. So all this cash splashing by central banks around the world really has been good news for commodity-based stocks. We saw both Codeco as well as Regis Resources reaching a 52-week high today. On the flip side, though, we did see a little bit of weakness in that property space, which was the only sector to finish in the red, but altogether it turned out to be a pretty good day for the Aussie share market.
Look, Julia, just that you mentioned obviously that key level of 4,400, we were able to get past that again. I mean, where do you start looking now in terms of upward levels?
It's a bit of a double-edged sword when we have a look at the macro picture, because all this quantitative easing by central banks around the world has, I guess, an effect on the Aussie dollar. And in fact, if we have a look at the Aussie dollar in trade today, it is a case in point. This is the Aussie dollar, and you can see the impact the Bank of Japan's move had. We saw a strengthening in terms of the US currency, but also a strengthening of the Aussie currency against the US dollar overall. So unfortunately, that's a headwind for the Aussie market, but you can see where the money's going at the moment, and that's the commodities space. If we continue to see that rise in commodities, hopefully that will override that impact of that very high Australian dollar on the Australian share market. 4,400 points being broken does support the Australian share market to about 4,700 points. So hopefully we will continue to see a rise there. But of course, every round of quantitative easing that we've seen has had a shorter and shorter impact on the market. Perhaps it will be different this time around because it is an open-ended program. But at the moment, the markets are really not acting too confidently. We are still seeing some fairly light volumes going through, although commodities have been well supported.
Corporate stories today. One of the big ones, Julia, Macmahon. What, I suppose, a day in terms of share price performance. In the end, closing down about 39%. The fact that that's actually off the lows of the day in itself tells a story.
A massive tumble for Macmahon, and it really reflects the confidence that the market has in this stock. Now, the downgrade that we saw today comes just 1 month after its full-year numbers and that guidance that we saw from the company. And back a month ago, the company was guiding 20% growth. They're now saying $20 to $40 million worth of profit for the full year, and that means a decrease of 64% on the recent numbers that we've seen. So Macmahon Holdings has gone from being a bit of a darling of the market to one of the dogs of the market, and it really is made worse by the case that this isn't the first time it's happened. Back in 2010, we saw a massive downgrade because of some of the impacts to its construction contracts. So its CEO has resigned. There will be a new captain of the ship at Macmahon, but unfortunately, I guess shareholders are a bit wary of this stock, given that just 1 month ago we heard such a good story coming out of Macmahon, and now 4 weeks later we've seen this massive profit downgrade due to their construction division.
Yeah, we'll actually be hearing from the new CEO a little bit later in the show, Ross Carroll, for all you people worth sticking around for a little bit later. Julia, I also wanted to get your thoughts. David Jones obviously coming out with their results today, a drop of about 40%, but a lot of it, I suppose, the interest was around their property.
No huge surprises in terms of the actual result, coming in at $101 million, so a drop of about 40%. Total sales for the year down by 4.6%, but I guess it was the first quarter of the year where we saw the steepest decline in sales, and by the fourth quarter things were looking like they had stabilised. I think one of the disappointing things that we saw was that the gross margin had once again decreased 37.5% from 39.1%, and that's a bit disappointing because this time around we saw David Jones actually decreasing the duration of its winter sales by 2 weeks. So you would have hoped that that would have boosted margins, but we certainly didn't see that come through. And of course, the property portfolio very much in focus to see whether we are going to see a redevelopment. There's a potential to redevelop, and David Jones has two sites in Sydney CBD, the Elizabeth Street site and the Market Street site, and whether we are going to see development potential of those two sites into either residential or office space. So the market's going to be watching that. The update is 6 months down the track, so we're listening in on this one. But of course, in Sydney, the residential market has been quite soft, and in terms of the office market, well, we've seen a lot of supply coming online here.
Yep.